All right, everybody, how are you? Let's have a look what the weekend, how the week closed on the US dollar, Japanese yen, and gold. Now, I'm going to start with the US dollar, Japanese yen. So we had a massive 145th flush right at the Tokyo session on Friday. Now, this was a due to CPI and the rate decision on by the Bank of Japan. But if you notice, this market is very weak, guys. The Japanese yen is super weak. Remember, when the US dollar Japanese yen goes up, that means the Japanese yen is going down, and it's pretty weak. Now, just have a look at this: 140 pip drop, which means that the Japanese yen went up 140 pips against the US dollar. All of those gains were given up throughout the London and the New York session without even a sweat. Now, I'm going to start by showing you the weekly chart, guys. Now, let me just delete everything on here on my charts. Remember that I use a ton of lines on my trading. But again, so this is the weekly chart. Let me zoom in because this is quite interesting. Now, every single candlestick is a week, 1 week. Now, this week closed quite bearish. Now, this is interesting because we liquidated these highs and then we closed extremely bearish. This is strong. This is a very strong close on the Japanese yen. Yes, I know that I said that this market for me was very, very weak, but this is a very strong weekly close for the Japanese yen. Remember, during the US dollar, Japanese yen goes down. That means the Japanese yen is going up against the US dollar. Now, this is a very strong weekly close for the Japanese yen against the USD, not only because, as you can see during the week, we liquidated those highs, but we closed below all of these weeks. Now, I am looking for further downside continuation at the open. Now, just based on this candlestick close, just based on this one weekly candlestick, this gives me the potential to look for shorts in this market. Now, let's go to the daily chart. Now, this is the entire week. This is the entire week of trading. Very choppy from Monday until Tuesday, etc. Very choppy. Now, this is the weekly open. Actually, this is 2 weeks worth of trading. Sorry, guys. This is 2 weeks worth of trading, very choppy. Now, until we got that liquidation, this was a very strong close. And that day with the Bank of Japan rate decision that moved all prices down. Now, this gives me the potential to look for shorts. Now, let's look at the 4-hour chart to look for actual levels. Now, this is the 4-hour chart. I'm going to look again for levels on the daily first. Again, I'm going to look for levels to the downside only. Now, the previous broken lows, these lows right here, would be the ones that I would want price to retest and move forward and move down from. Now, targets for further downside move, we can see that this is the low that created that move to the upside. Now, I would want to see some kind of continuation to the downside should this play out, but that's a 450 pip move in a market that has been moving on a daily basis, guys. The market that has been moving on a daily basis 100 pips, waiting for a 560 pip move. To me, it's out of the questions. Yes, we might get there, but because I'm a day trader, this is not going to happen in a single session. So this target is a no-go for me. Now, what I would want to see is the actual lows of this week. Previous week lows would be my target for this continuation to the downside. Now, if nothing really crazy happens during the weekend, this is what I will want to see play out. Now, on the 50-minute chart, guys, we have those highs, the liquidation highs. Now, we have those highs. Now, if you notice, this is the first, um, this is the first targets, not targets, but the first level that we use, which are, again, if we go to the 4 hour chart, again, the lows of the range that we broke. Now, this line, I'm going to thicken the line out for you guys so you understand which is which is the target, which is the actual lows that we're looking at. Now, let's go back to the 15-minute chart. So this thick candles, thick line are the lows that are the lows of the range that this move broke with, right? And this is the lows of the week. Now, my play here would be simply be a very strong open liquidating these highs, right, and liquidating these highs to get some sort of price failing from these levels and then a continuation towards those lows. That would be the only play I would look for a on such a weak market for the open. Now, if nothing crazy happens and we don't open with a huge gap to the upside or the downside, that means that if we don't have some crazy tweets from President Trump or some sort of, updates on what seems to be made up war, this is what I would want to see play out, right? Now, why? As you can see, we went on a down move, then a very strong down move, and then we got stuck in a range. Now, just like before, right? Just like before, what happens on the higher time frames happens on the lower time frame because we are looking at candlestick behavior. Nothing more, nothing else. And candlesticks behave the same way. Either they're on the hourly, 4 hour, or daily, right? What happened here on this daily range, guys? We have the high of the range, the low of the range. Boom, 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 boom. We liquidated that high of the range to get to the low of the range. It's just an example of what happened here on the daily time frame with a range. Now, after showing you that example, if we go to a 5-minute chart, 50-minute chart, sorry, this is a range that we're looking at. So what we need to see or wait for is liquidation of the highs to get to the low of the range. And that's it. That's my play for next week on the US dollar, Japanese yen. This is what I would want to see. I wouldn't look for reversals. The reason that I wouldn't look for reversals also, guys, because if you notice, price close very close to the high of the range, right? So a strong move to the upside will either very fast tell us that buyers are in control or that buyers are getting trapped. Now, how can you spot this? Pretty simple. Candlestick behavior again. How candlesticks open, how candlestick closes. Now, how price action behaves itself. Now, if you go here and at the open, we see a bunch of candlesticks, bullish candlesticks pumping up. That doesn't mean that buyers are in control. We need to wait for the pullback. Markets do not move in a single direction every time. So if we get a pullback towards the highs and create a higher low, right, then break with this high, then yes, buyers are in control. We are no longer looking for my play. But guys, if we get a strong move to the upside and then we see a strong move to the downside, right? This is no longer a pullback. This is a trap. If we get a very strong move to the upside and a strong move to the downside, this is no longer a trap. This is no longer a pullback. This might be a trap, meaning that these aggressive buyers or breakout buyers are trapped on the wrong side of the market, and then the probabilities of us moving lower is quite high. So that is what you need to be looking out for if you are looking for my play, at least. Now, I haven't looked at this chart, how they closed. I just got to Bali, so I didn't trade for the past couple of days. I ended up my week on Wednesday. And yeah, we're going to go from the daily. Now, gold, sketchy. Very sketchy. Yeah, it has been quite difficult to trade gold in the sense that it's no longer trending like crazy, and in the sense that it's just not possible to buy and hold gold because it's making all-time highs every single day. We actually need to do some technical analysis in this market today, guys. So we're gonna grab the highs here. This is the weekly highs, I reckon. This is the daily candle, the daily time frames. So if we go 1, 2, 3, 4, 5, 6, 7, actually, this is the weekly high. But you know what? We're going to go to a 4 hour chart. We're going to look for actual ranges. We have this range high right here. Remember, I like to look for ranges. I like to see where price is going, what price has done before. And it might sound quite curious, but this is a structure that is quite difficult to trade in the sense that we have this high, right? So we were in a very strong bullish market. We created this low, then we created a lower low, then we created a lower high, I'm sorry, and then we created a lower low here. So is this the lower high that will push price down towards a lower low, breaking this low, or are we going to get some sort of higher high before the actual move to the downside? That is the question, and that is not for me to answer because no one knows. No one knows. No one knows what's going to happen. What you can do is just look at the markets, create a trading plan, and wait for that plan to present itself. And if it doesn't, there is no trade. Now, because we are in a daily structure, bearish 4 hour structure, making lower highs and lower lows, I'm looking for shorts, guys. I'm most definitely looking for shorts. Now, is this the lower high that is going to push price down? I don't know. No one knows. So that's why we go to the hourly chart and we look for ranges. So on the hourly chart, 4 hour chart, I'm sorry, guys, we look for ranges. We have this range high and we have the overall low right here. Now, this doesn't look like much, but what I would want to see is this. Now, again, this is the same thing happening over and over and over. What do we have here? We have a range. What happened here? We have a strong open to the upside for then creating that lower high for price to break with the lower low. So I'm looking for the same thing to possibly happen to me for me to get short on gold this week. If nothing crazy happens, again, if nothing crazy happens throughout the week, I'm looking for this exact same scenario. Gold opening strong, trapping buyers, creating that lower high of the overall daily structure, then trapping those players for me to get short towards my targets, which would be the previous lower low. Why I wouldn't hold through that? Because I don't know if those lower lows are going to hold or not. But my play here on this market for that week is short and short only. I do not. I am not keen on mean reversing or trying to trade against such a such a strong structure, a very evident bearish structure, right? Right now, not only this structure breaks, I will be looking for another play. But for the time being, this is what I'm looking for at the open, guys. Trade safe, and I'll see you around.